We've made it to the end of the week. It is Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday, as we are going to wrap up our week the same way we do each and every day, looking at 10 to 12 futures markets from an educational perspective, identifying both breakouts and reversals. Now, yesterday we had our live trade room at Traders Army. I will say today is the first time I've looked at the markets in 2 days. I did not even open my computer yesterday, as it was the birth of my first baby girl. Miriam Therese was born was born Wednesday, and so I took most of Wednesday and all of Thursday off. So this is the first time I've looked at the markets in 2 days. And what's going to be interesting about this is that, you know, in a just a cursory glance, I've not even really looked at the markets as of yet. But some of the lines I still had from my Wednesday morning daily market commentary are up. And even if some of those areas got violated, one of the things that we're going to talk about today is noticing how old resistance oftentimes acts as new support, old supply acts as new demand. You'll hear us talk about that a lot. That's really where we start to talk about fair price value areas, and how fair price value areas create turning points in markets. The other thing that we will take a look at, as I just took a cursory look this morning, is a rollover gap fill and how to play rollover gap fills. A lot of people use a brokerage firm that stitches together contracts and adjust them so you don't see any of the rollover gaps. Well, I want to tell you that rollover gaps do play a part in your trading. And so not a whole lot to look at when we talk about today, but we will look at some of those and maybe use it as a great lesson in an educational spot. So let's go ahead and dive right in. So let's start with the ES. The ES this morning, we are down about 4 points, a little bit flat. We had, it looks to be, a little level of demand right here that we had identified on Wednesday morning. Now, interestingly enough, that level of demand just blew right through that area, did not hold, unfortunately. But, and this is an example of keeping an area on the chart, it has become kind of an area of control where we see that price has reversed a couple of times. Now, we hit here again in the overnight, moved away from it twice, and has reversed off of that level. Now, whenever I see this happen, that a level, and now, by the way, if I look further to the left, this was also an area here. Now, why is that? Why are those important? Well, remember that the area that caused this turn doesn't really matter anymore. The area that caused this doesn't really matter anymore. But the fact that those areas are there lead more and more people to place orders at that point, because you got to remember what the market exists to do. The market exists to find equilibrium, right? That's what a market exists to do. It exists to facilitate trade, and in order to facilitate trade, it has to find equilibrium, which means buyers have to equal sellers. So the market tends to trade back to those areas where it is shown to have equilibrium in the past, and that is a fair price value area. And so while I may not use this level here again for a trade, and I'm going to remove it from my analysis, I do still think that that's an area that becomes a magnet for price to trade back to at some point. Now, you know, are we going to make it back there today? Very well could. It's 30 points away. In the S&P, 15 points away in the S&P. We're 30 points away from that 3,000 number that we had popped above the other day that we spoke about. It was kind of a big deal. And so, you know, I think your better opportunity today is going to be some sort of a breakout over this high. Now, this could be this is our Globex high that we have here with a bit of supply up above there, but breaking above the Globex high will be a trap if we don't get quality basing. If we get quality basing somewhere in here, then I think it's going to be okay to take a breakout above here. Without quality basing, you're going to get what's called a bear trap. A bull trap. It's a bull trap. And the reason it's called a bull trap is because the bulls will be buying as it breaks above this region, but the bears could be sitting here waiting to take those people out and then bring it back down. So a lot of people would call that a false breakout. If we get basing in front of the level, what we'll probably have is enough accumulation of bulls to thrust through and bust that trap. And then I think you can see price make it all the way up to this 30.50 area, maybe even 30.54 by the end of the day. So, but the key is going to be, do I get the basing that's required to make that trade make sense? Next, let's look at the Russell. I've had a lot of people request for us to look at the Russell every day, and so same thing with the rut. Now notice the same area of control. This is the same level that we identified in the S&P. Whereas in the S&P, it acted as demand in the overnight. Here in the Russell, it's acted as supply, and it is showing some weakness continuing to come back down. So whereas in the S&P, I was looking at a long opportunity, in the Russell, I would be more concerned with a potential for short and for price coming back down, because the Russell is, we've got a slightly deeper pullback here on the rut. Now we're above a breakdown area, but we could break down even further from there, and price could continue to fall. We are seeing a bit of slowdown in this piece. Now combine that with our NASDAQ markets. Our NASDAQ markets are not really performing as well as the S&P or the Dow, and this is interesting to see when this happens. So the NASDAQ has been stalling as we've approached our all-time high, right? We've approached the all-time high and we're stalling just a bit. So with that stall, and we're not seeing as much of a move down, as much of a move up, might we get a little breakdown opportunity below this region here as we are kind of stalling out a little bit. So keep an eye on that level for a potential of a breakdown if we get basing in front of that region. Next, crude oil. So in crude, we are below our level of demand, the area, of resistance. We're below our area of resistance up here. We do have a bit of supply up above us, but it's not great supply to really lean on for a reversal trade. When I look at the demand level, I think my demand level is really best down here at our whole round number of around 30. We could even make that level a bit wider. Just below 30, I think you've got a decent little level formed right in here where we could see a retest of that area. And then gold. Gold has rallied up off the lows. Now, interestingly enough, take a look at this gap fill area here in gold. So if I were to rewind the tape from Wednesday's daily market commentary, we talked about a gap fill trade in gold and how rollover gaps matter. And this is a rollover gap, right? I hate it when a broker will stitch together contracts artificially so that you don't see gaps. Gaps make good trades. Here's a great example. We saw price come back into this level, and we got a very nice move away. Now, we did have a price target and a potential reversal up here as a confirmation entry, but you had no entry into there. And so if you stayed in the long, you got a much bigger run. If you just took your profits, then you still wound up with about a 4-to-1 reward to risk trade off of this gap fill level. Very, very strong move from that gap fill trade. So now what do we look for as far as today goes? Well, on my 4-hour time period, we can still see that we're very sideways. I spoke the other day about iron condor trades in gold for those of you that are comfortable trading options on futures. If you're not comfortable on trading options on futures, there's a really, really great class of options on futures available for free at tradersarmy.com. If you go to tradersarmy.com, all you have to do is be a free member, and you can go to the area that says free trading videos. We've actually got a little bit of a class on options on futures. So, but that's what I think makes the most sense right now, is to look at a potential iron condor or vertical spreads on on this position, because I don't see a lot of great directional trades at the moment. Next, moving over to our bonds and currency markets. So here's our ZN. Now looking at the ZN, we had a gap fill. Same exact trade in the bonds as we had in the S&P. It was our 15-minute level where we identified the gap fill. Now this one was a little bit higher than the actual gap fill itself, but price came into that level and gave us a nice move away. We've now come into it a second time, and if you took it the second time in the overnight, you got another little bit of a move away. So this has now been tested twice and traded more than halfway into it. So I need to now remove this level, but hopefully you made a little bit of money on this trade. Do me a favor, leave me a comment down below. Do you trade gap fill areas? Have you ever looked at gap fill areas, specifically rollover gaps when trading futures? And if you haven't, why not? What has stopped you? So I think that's a good topic of discussion for today. In our bigger picture, our 4-hour, we are still very much in between our levels of support and resistance with very little turns happening. So I would just hold off on adding anything new to the queue. In the Aussie, we had a demand level set up down in here. Price came into this level. We did come down a little bit below the zone. May or may not have stopped you out depending on the tightness of your stop. The tightest your stop could be is right here on that style of a trade. So it came down right to the stop, which is always frustrating when it just stops you out and then continues to run. And so if that happened to you, I feel terrible because Lord knows that I've had that happen to me on a number of occasions where it moves along without you, and it's just so frustrating. Well, don't allow it to frustrate you. That doesn't do anybody any good. But one of the things I would say is as we come back up in here on our hourly chart, we're still strong on the bullish side, but look at our 4-hour price action that we're building to, right? Our 4 hours building to a nice bit of price action for a potential upside breakout above that region. I just need a bit more basing in here to make this make sense. If I don't get the basing, then look for the retest. In the euro, also very, very strong as we're seeing weakness in the dollar. So all these currencies are picking up some steam after having a week of just slow go where it just wasn't doing anything. We've picked up a lot of steam in the overnight, especially. So looking at the 15-minute chart, you can come back down into this region here for a potential reversal. Stop obviously below the pivot in this case. You got to give yourself enough room to be right on the position. And then the Canadian dollar. So here's our Canadian dollar setup. Now, this one, unfortunately, did not give me a fill because we set it up as a confirmation entry, and it was a touch and go off of the level. So if you got filled on it, great. If not, that's okay. I think we still have an opportunity, especially with the weakness of the dollar, provided I get a bit more basing. I don't have enough basing here. This is one touch. This would only be my second touch. And ideally, we'll pull back from here, and then I'll get a bit more basing before a breakout opportunity really shows itself going forward. Great British Pound and Japanese Yen. So the couple of really good trades in the gold market, in the bond market, in the Nasdaq. The pound was not one of those. In the pound, I had a really nice level on level setup, and I like level on level trades because a level on a level gives me an opportunity to get long. And I saw that we had two of these wick over wick regions. Well, neither one of those levels held, and the market just popped right through that zone and then smoked right back up. So unfortunately, those levels didn't hold. Usually those are pretty good trades, especially at the European market open time of day. Unable to really hold in this case. So now I'm just looking for a breakout above this 2374 area, provided that I get basing it in front of here. And then the Japanese yen. The Japanese yen, we had a potential basing area here. We based in front of the level, which makes that level untradeable. And then I didn't get basing in front of this breakout, which now means that this becomes a retest area just below, just below somewhere down in here. Now, we had this huge move up just before the European market open that we're going to put a little level around. Now, we did come back to the breakout line that I had posted, and this is just a good picture of old resistance acting as new support. We hit that level and popped away, but we're unable to sustain it at this point, so I'm going to leave this demand line in here. So remember, we're heading into a weekend, and as we head into any weekend, our rule on weekends tell us that we cannot hold positions over a weekend unless we have a way to hedge or unless we're very okay with unknown and uncontrollable risks, in which case, why in the world are you a trader? So just make sure that you understand how options on futures work to help contain some of those risks as you may come across them. So if you have any questions, as always, send us an email, support@tradersarmy.com. Until Monday, everybody, I will talk to you soon. See ya.